How to use investors' money to buy real estate. Are you ready to buy real estate, but you want to get some more investors involved because you don't have all of the money? Well, there are tons of investors that want to invest in real estate. I'm going to show you how to get those people to invest, what you should be showing them, and more importantly, how you can start right now. Let's go.
Noel. Yeah, she can fix that. If you gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
In this video, I'm going to share with you a simple step-by-step process on how to approach real estate investors for investments in your deals. I'm going to share with you exactly what you should be saying to them so that they actually want to invest. And last but not least, I'm going to share with you how you pay these investors out so that you can get investors to come back to you again and again and again. One of the things that you need to know about real estate is that most of the time you will involve investors. As you grow as a real estate entrepreneur, as a real estate investor, one of the key things that you are going to get good at is getting money. You have to be able to raise capital for your deals. I know so many times we see all of these really big buildings and skyscrapers and apartment complexes and all of these major real estate developments, and we may even wonder to ourselves, how did they get all of the money together to build that skyscraper or to build that apartment complex? Well, it's nowhere near as difficult as you think. It's just most people do not share this information that I'm going to share with you. So I'm going to tell you how to get this done because it is not difficult at all. 1, raising capital for your deals. So when you are going to raise capital for a deal, there are 2 different types of ways that you can go. 1, you may already have a real estate deal in place that you are trying to raise capital for. This is really easy because in many cases you will just put together what's called like a joint venture agreement where you would decide how many investors you're looking for and how much money you want from each investor and then how and when those investors will be paid back. That's pretty simple to do, but those are mostly for smaller projects that are less than $1 million. Maybe you're just looking to buy a couple of rental properties, or maybe you're going to buy this bulk deal from a landlord that's selling all of his rental properties or something to that effect. Those deals are probably the smaller deals that any new investor should start with. I don't recommend that you just start being a real estate investor and start trying to raise $20 million for an apartment complex because most likely you don't know all of the pieces or how you're going to be paying people back. So if you've never raised money for a real estate investment, it is very easy to just find a project that you want to do. Maybe it's fixing and flipping one house, or maybe it's buying a bulk deal from a landlord. Maybe he's selling 5 of his rental properties. They already have tenants in them. They already have leases. So it's going to be an easy deal for you to pitch and share with others. And it'll be easy for you to figure out how much money you need for that deal. That's really easy. In fact, I have an entire video that I've made on how to partner with people, especially if you have multiple investors. I'm going to put a link to that video on how to invest in real estate with multiple investors because this is probably what you will need to do. Now, let's talk about bigger projects. If you want to raise money for a bigger project, this is an amazing thing to do. But usually you want to at least have raised money for one other real estate venture before you move into a project that's over $1 million. Let me explain. So when it comes to raising money for a large real estate project, one of the things that you are going to put together is what's called a pitch deck. And within the pitch deck, you are going to put your credentials or what makes you credible for this. So if you've never done a real estate deal before, it's going to be really difficult for you to complete your pitch deck with your past projects. However, I'm going to still with this example so you can understand what it will look like when you go to do these bigger projects. So when it comes to doing a pitch deck, this is just a simple PowerPoint where you put together on what type of projects you are either doing or the types of projects that you are looking to do. In the case of this example, I'm going to tell you about projects that you are looking to do because quite frankly, I don't think that you need to have a project in order to start raising funds for that project. In many cases, people wait till the last minute to try to go find the money for a project and they don't have a lot of time. If you're actually proactive and you say to yourself, I am going to buy a small apartment building, maybe it's going to be 24 units, okay? That's not a big apartment complex. That's not even considered a large apartment building. Anything but over 5 units is considered multifamily and will require a different amount of funding. So let's just say apartment complex, that's 5 units to 24 units. units, and let's just say it's $5 million, okay? Let's just use that as an example. So if you are raising money for this project, you obviously are going to need a mortgage. But in many cases, when you're doing these projects that are multifamily, in many cases, there will be seller financing available, or you could assume the mortgage that the seller already has. This is one of the reasons why I tell you probably don't want to go into these bigger projects until you've done a smaller project, because there is a little bit more complexity to it. But let me just keep going with this example because you can do this. You really can. So let's go with this example where you have a 24-unit apartment complex that you are looking to find funding for and you're going to raise money for. You don't actually have to have the property outline, but you may have a few different properties that fit what you're looking for so that you can tell your investors what area they're in, how much money they're making. You can put together some projections and some proposals. You don't have to have exact numbers, but if you have a few properties that you can use as an example, this is what you will put in your pitch deck, and people will literally give you funds for these types of projects. Now, once you've identified that these are the types of projects that you're looking for, these are the amount of units, and these are some projections on how much each unit is renting for, and the expected return on the investment, then you can go to making a pitch deck that shows how many investors you're looking for. You can start to decide, do I want 10 investors to give me $10,000? Do I want 20 investors to give me $10,000? Do I want 50 investors to give me $100,000? You literally get to decide in your pitch deck what types of investors you're looking for and how much money you are looking to acquire. I suggest you asking for a higher amount of money from a fewer amount of people. I'm going to explain to you another way in just a second, but I'm going to tell you that the more investors you have, the more complex it gets sometimes. So if you're looking to buy this apartment building, like I'm saying, that's 24 units and it's $5 million, most likely you're going to need $1 million as the down payment. So you may need, 10 people to give you $100,000, for example, and then that is how you have the down payment. But of course, you also want to have some reserves and you want to have some money, for extras. So you may say, I want 12 investors to give me $100,000, just using that as an example, so that you have an extra $200,000 in reserves or for funding for your project. Now, this pitch deck will be very simple. Like I said, it's a PowerPoint. And if you have any trouble making this, you literally can go to sites like Upwork and Fiverr, and there are professionals that will help you make your pitch deck for just a few $100s. Now, once you have this pitch deck, you will then send it out to everyone you know, and you will start to have meetings, like a Zoom meeting, where you present your project. This will be the easiest way to start getting money for your project. You can start with coworkers, you can start with family members, you can start with friends, but you want to start having Zoom calls where you go through your PowerPoint, your pitch deck, and show them the types of projects. Make sure you have lots of pictures, make sure you have maps, make sure you have some projections, but more importantly, you have to have the projections on how much money they're going to make. So many times we'll focus on how much money we need and how much the project is going to cost, but the investor that is listening to your pitch deck is wondering, how am I getting my money back and when am I getting my money back? So make sure that you have an entire page that talks about how they are going to get a return on their investment. And again, make sure they know that this is a projection, this is an estimate, and give yourself more time than you actually think that you need in order to get that money back to them. Because in many cases, it will take you a year or two in order to start repaying your investors in any way, shape, or form. Crowdfunding. Crowdfunding is another amazing way that you can start raising capital for your investments. And again, it's a very inexpensive way to get lots of unaccredited investors to invest in your real estate projects. I have done crowdfunding before and I've actually learned a lot, but I was probably one of the first African-American females ever to do a crowdfunding project for a real estate investment. In fact, I even got an award for being the first female and the first Black woman to do one on a certain website. So I've learned a lot in the process. Because prior to 2012, there was no actual way for you to get unaccredited investors into your business. Now, since the Job Act, it has opened this up and you can do a Regulation CF, which stands for crowdfunding. And that is how you can actually have that pitch deck, how you can promote it to unaccredited investors, and people can invest as little as $250 into your project. However, in order to get to the $5 million or the $10 million or the $1 million mark, you realize if people only give give you $250 or $500, you're going to have a lot of investors. This was actually the lesson that I learned with my crowdfunding. However, I still recommend it to so many people. Prior to Barack Obama signing in the Jobs Act of 2012, there was no real way for you to market your investment to unaccredited investors. Since that has opened up, there's been more opportunity for you to raise up to $5 million a year for your projects, for your businesses through unaccredited investors. And you can use so many different avenues, and you can get up to $5 million every single year for your projects. Now, I strongly recommend you learn more about crowdfunding. I even suggest that you do one, but just know that the con of it, again, that's the pro. The con of it is that you are going to have a lot of unaccredited investors. In many cases, you're going to have to educate them. You're going to have to explain to them. And there is a cost associated with having so many investors. So that is why you should probably invest or have the investors invest maybe $1,000 as a minimum instead of $250. That way they're a little bit more savvy. That way they understand, and they're not someone that has just a little bit of money and they're looking to get a return on their investment really quickly. You can explain to them that I'm getting a real estate project, this 24-unit apartment building, and we don't expect to see profits for a year and a half or 2 years. Someone that is investing a larger amount of money and is a little bit more savvy, they will be understanding of that. The people that are lower and have a lower amount of money to invest, they will not usually be as patient. That was a lesson that I learned, and so I'm sharing that lesson with you. However, we're stronger together, and the more investors that you can have investing in real estate, the stronger everyone is, especially if you are successful in your real estate projects. I am having a free class that you can come to. Just go to noellerandall.com/masterclass. I literally have dedicated myself to doing a live free class every single month for you, where I'm teaching you about real estate investing, I'm teaching you about business, and I'm more importantly teaching you how to use business credit and business funding to fund all of your business dreams. You literally can change your entire financial situation just with education. So I kindly invite you to Noel Randall's Masterclass, and all you have to do is go to noellerandall.com/masterclass and register for this free live class today. Spots fill up very quickly. This is a live class. It's not a recording, and I am dedicating my time to you to teach you. And there's always a question and answer session, so you can ask your live questions directly to me at that class. Literally just go to noellerandall.com. That's NOELLE Randall, RANDALL.com/masterclass. And masterclass is spelled MASTERCLASS. Go to noellerandall.com/masterclass right now and get your spot, because I want to make sure that you have all of the resources, all of the tools, and all of the knowledge that you need to be successful. This is Noel. To your success.